Good morning once again. In our market brief, we're gonna tell you all the update that happened this week. We have a lot of good news, and we've been waiting a lot for the interventions that have been happening, and especially that happened in this week. We've seen a lot of volatility in the market, and all the traders that have been following us and they had their pending orders ready. I think they should be happy by now, especially this week. Noor, we have a lot of action happening that happened already in the past couple of days, and now we're closing the week. And we can see dollar yen going down. We've seen the Fed comments. We've seen the Bank of Japan interfering, Bank of England as well. The ECB comments, Kamala Harris, and the action that's happening in the Middle East. There's a lot of subjects to talk about. So I don't know how we're going to fill it in 10 minutes. So let's start with Bank of Japan, because I can see that it's breaking the support line as we speak today as well, like another support line, actually.
Yeah. I mean, this was basically long waited. First, of course, I mean, Bank of Japan intervened multiple times. It did not work, and then they have to intervene again. They intervened about 3 or 5 times within the past 2.5 months. But the most important thing that happened over the past few days is basically, the raising rates, or they raised rates finally again. And they hinted for even more rate hikes going forward. The most important part was that they will start trimming the asset purchases, and this was basically more than what the market expected. At least this is what the Bank of Japan. That's what the Bank of Japan is saying. So going down already to 148, currently 148.90. There was a lot of short interest, and there was a lot of also stops that were triggered above the 160 when it was before. So going forward, this is kind of like, okay, you can say this is an excessive move, but this is not to be. It's not a surprise. It is basically just what we've been waiting, or I've been waiting for, also for a long time. And this can actually even continue. And I wouldn't be even surprised if we see 145, before the end of the year. It could be easy.
Yeah, 147 before it. We have a nice support over there as well. And then the extension of that will lead us to the 145s. Totally agree. But we're not that far anymore. It's just another 300 pips, actually.
Yeah,
so yeah, exactly. And let's move as well. As we were talking, sterling yen was the one that made the huge movement. And the reason for that is that Bank of England, they reduced the interest rate, and that definitely affected GBP in a negative way. And Bank of Japan interfered, which is positive. So sterling yen is the perfect trade. And you can see in the past 4 days we moved almost 1,000 pip, and you were mentioning 1,600 pips as far as I remember. And
1,800 days within the past 16 days. 1,800 pips in a matter of 16 days.
16 days.
Bank of England was interesting because they did exactly what the ECB did, which is they reduced rates, but at the same time they did not commit to any further rate cuts until they see more of the data. Inflation in the UK is back under control, back to the target. That's the main inflation, not the core inflation. But they did not commit to any further rate cuts. But at the same time, don't forget, most of the British pound weakness over the past few or 2-3 weeks is basically not because of Bank of England. It is more, or it has more into what is basically coming out from the new government, which they've been saying that they have to take tough decisions, and they accused the previous governments of not being clear about their spending, and that they've been hiding a lot of spending gaps. So that's one reason why the British pound is basically also is weakened. Also, not to mention or not to forget, is that usually Labour governments, based on the history, the British pound usually gets a lot of pressure based on what the policies that they might implement. But so far, from what we heard from the new government, it looks like the British pound will be one of the weakest currencies after it was one of the strongest currencies against the dollar this year.
Yeah, but that's let's not forget as well that the dollar index itself on the daily chart, we're still trading in a sideway. We couldn't break or hold breaking below 104. We're trading now 104.26. So the dollar is not moving much, and then we're seeing all the action now in the other countries, which is giving a little bit more opportunity with the volatility for the clients or for the traders. Basically, it becomes easier actually to handle the market.
Sort of. I mean, when you have a range market, it would be good. But I think this range of the dollar is almost getting very close, because there's something very important that happened this week, and people needs to understand it. Let's forget about the Federal Reserve decision, because it was widely expected.
Exactly.
At the same time, they did discuss the possibility of cutting rates this week, meaning they were almost there to cut this week, but they decided not to. The majority, they decided not to. But at the same time now, after what we saw from the market correction yesterday or the past few days, in addition to the data, this is basically now if you look at the Fed fund futures, the market is now pricing in a possibility of 30%, not of a 25 basis point rate cut in September, but 50 basis point. And today's data that we're waiting, which is the jobs report, it is very important to understand, if at any point we see the unemployment rate today goes above the previous data, which is 4.2, 4.3%, this will give the market another reason that, one, the Federal Reserve might have to cut more than 25 basis point. Two, this will be, unfortunately, is not going to be positive for stocks, because this would give us also more evidence that the Federal Reserve made the same mistake when they were late in raising rates, and they might be already late in cutting them. So this explains why, remember when we talked about it multiple times before, that the impact of a negative data is going to change. Because before it used to be negative data, good for stocks. But now negative data is not good for stocks, because it is increasing the idea that soft landing is not achievable and would increase the risk for a hard landing. So this is what explains also the correction that we're seeing in the US stocks, and it might actually continue.
Yeah, and the indices actually, we're seeing some nice corrections. To be honest, when I see corrections like this, it makes me feel comfortable, because this is a bit more normal than going up with no corrections.
Than a bubble.
Yeah, exactly. It's scary when the market keeps going up without any correction. Now we're trading within the channel, which is amazing. Just respect the trend as long as we are moving within the same trend up until now. In a minute, we need to discuss oil, and the other minute, gold. So I can see that oil, after the OPEC decision, it started to pick up a little bit. Definitely, we're still relying on China mainly on increasing or having a better economy to be able to increase the demand on oil. But it picked up quite nice because of the geopolitical tension that's happening in the Middle East, and if the war is going to extend to Lebanon or not. If Iran is going to interfere, they will react properly, or they will just react the same way as before. This is just a play, or this is going to be a proper reaction. So all of those data eventually affected the market directly. We've seen gold going up and oil going up. What is the OPEC decision regarding the interference in oil market, in the oil market?
The meeting did not basically show any kind of, or there was no new recommendations for, this is the monitoring committee. So they did not recommend anything. They did not recommend increasing or even cutting the production. So meaning that they're seeing
they
kind
did
of
say
like
that they will interfere and start cutting the 2,200.
That would be possibly in the next phase, if the demand basically continues to show any kind of weakness. But so far, yesterday's meeting, basically the delegates said there's no recommendation or there's no new recommendation. The last meeting, you remember, OPEC was saying there's not going to be any kind of like cuts yet, but in the next year, at the beginning of next year, we have a strategy in place in order to increase production if needed. That is basically based on what they've said, and this is why basically oil declined for the past few days, and then yesterday we saw, or 2 days ago we saw that huge uptick. Since there's no production increase anytime soon, that basically increased it. Not to mention, or not to forget, also the geopolitical tensions. The only one thing I would advise traders about oil and gold. Mostly the move that we're seeing now is basically based on geopolitical risk and the anticipation of a retaliation from Iran. And if this doesn't happen, or if it happens and it was basically orchestrated just like what we saw previously, that move might not be sustainable. So you need to be very, very, very careful when it comes to especially gold and silver. Despite the fact technical outlook for gold is still positive on monthly, weekly, daily, but always keep an eye on.
We have the previous high in front of us actually on gold. So
yeah, we're not far away
just
at all.
Almost $10 away. It's not a big deal. So
and you don't need to try to pick the top. I mean, as long as the bullish outlook is there, you will be much better if you continue with the trend itself and not to fight it.
So basically, briefly, just lock your profits, put your trailing stops in case you need them, but don't stay in your trades locked, thinking that this is a trend that will continue forever. This is just a geopolitical reaction.
For the time being, at least.
Sorry, this is just a reaction on the geopolitical tension.
Yeah. At least for the time being.
Yes, exactly. So thank you very much for attending. We'll see you on Monday, inshallah, and have a nice weekend.
Have a good weekend.